Friends, this is the third class of ledger trial balance posting, and in this class we will again go for a problem with journal entry, ledger and trial balance. This problem has been taken from your most popular prescribed book T.S. Grewal chapter 6, that is your ledger. So before starting with the journal entry, I like to tell you, you have read the question at first. If you have not read it, please read it, note it down and start doing the problem with me so that you will understand definitely better. So let me just make a revision of the journal entry concept. This is a candlestick upward debit. This is a candlestick downward credit. This is a mirror. In front of the mirror, if you put a candlestick, you will see the opposite image in the mirror. So if it is debit, opposite is credit. This is the mirror concept. And asset increase debit, expense debit, liability decrease debit. If your payables are decreased, it is debit. Similarly, asset decrease credit, income credit, liability increase credit, liability decrease debit, liability increase credit, opposite. Just opposite inverted image of the mirror. If you put a mirror before you, you will see the same image but with side change. Here also the same. So let us come to the journal entry and we will go for the ledger. Suresh of Kanpur started business with cash. So friends, this is date. This is your particulars, this is your ledger folio, this is your debit, this is your credit, right? So this is date, this is particulars, this is your ledger folio, this is your debit, this is credit. So this is amount rupees, you write all these things. So let us come to the Suresh started business with rupees 1 lakh. This is on 1/1/2019. I can write 2019 here. This is January, so that 1. Suresh started business with cash. Rupees 1 lakh. So it is very simple. In the books of business, money, cash is coming in. So when cash coming in, cash is a asset. Asset increase. So cash account debit. Cash account debit 1 lakh to capital account. This is your credit 1 lakh. Being the business started with cash. Then we are coming to bought goods for cash. This is on 02/2. Bought goods from cash, so they are purchasing goods. So purchase account debit. Purchase account debit 20,000 to cash. This is again 20,000, right? So purchase account debit to cash. Sold goods for cash. When you are selling the goods, money is coming to you. So cash account debit, cash account debit 7,000 to sale. Sale is a income credit to sale. This is 7,000. So cash is coming to you, a cash asset increase, cash debit, and this is a sale. Sale is your income, so income credit. Now we are coming to sold goods to Shravan of Delhi 6,000. This is on 15th. Sold goods to Shravan rupees 15,000, right? And in this case they have not told you. No, it is 6,000. Sold goods to Shravan for rupees 6,000, but they have not told you that it is a cash sale. That means if name is given, it is not stated that it is a cash sale, definitely it is a credit sale, right? So it is a credit sale. So what we will do, Shravan is a customer account debit, customer is a asset increase. So Shravan account debit, Shravan account debit 6,000 to sales account. This is also 6,000, right? This is Shravan account debit 6,000 to sale. Bought goods from Anurag on credit. 50,000 goods on credit. This is on 18. So when goods are purchased for cash, purchase account debit to cash. When goods are purchased on credit, liability increase, payable increase. So you have to credit with the name of supplier. Customer account is debit in case of credit sale. Supplier account is credit in case of credit purchase. So purchases account debit, purchase account debit. This is your 50,000 to the name is Anurag, to Anurag, to Anurag account 50,000. This is your credit purchase on 18th. Then we will come to 19th. Return goods to Anurag. Purchase is a expense, debit, and Anurag is a supplier, unpaid supplier, liability. I have to pay, the business have to pay. Therefore it is a liability increase. Therefore to Anurag. Then we are coming to the next entry, that is on 19th. Return goods to Anurag 5,000. So it is a purchase return. When goods are coming, this is purchase debit. In case of return, the goods are going out, so it will be credit. So purchase return is a credit because the goods are going out, asset decrease, stock decrease, right? So Anurag account debit, just the opposite here, Anurag account debit to return outward account, the amount is 5,000. 5,000. So here there are two names. One is your return outward. Another one is your purchase return. You can write any one. You can write Anurag account debit to purchase return. Purchase return means goods is going out from the business, from the stock decrease, therefore asset decrease, therefore it is a credit. And Anurag, when we have purchased, Anurag was credited. When we are returning, Anurag was debited. So this is on 19th. Then comes the 20, goods sold for cash on 20. That is your cash sale, cash account debit 20,000 to sales account. This is also 20,000. So cash account debit to sales. This is your 20,000, right? Now this is 20. Then comes the 22, paid electricity bill 1,000. This is sold goods for cash. It was 30,000. It is not 20,000. Please change it. It is 30,000 in the question. Please check it with the question. This is 30,000. It is a cash sale, right? Paid electricity 22. I am writing 22 here. We have to go by the same format. On 22, this is a paid electricity 1,000. Electricity is an expenditure debit. This is electricity charges account debit 1,000 to cash account. This is 1,000. So electricity expenses paid telephone bill 28, paid telephone bill. So this is again expenditure, telephone expense account debit, telephone expense account debit 500 to cash account. This is 500. Then after 28, 29 paid rent 800. Rent account debit 800 to cash. This is again 800. After 29 it comes to 30. In 30 it is paid wages 3,000. So wages is an expenditure, wages account debit 3,000 to cash again 3,000. This is cash account. You can also write the narration cash account debit to capital being the capital introduced in the business. Purchase account debit to cash being the goods purchased. Cash account debit to sale being the goods sold for cash, right? Then goods sold to Shravan of Delhi. This is a credit sale. Shravan account debit to sale. then being the goods sold to Shravan on credit, purchase account debit to Anurag, being the goods purchased on credit, returned goods to Anurag, Anurag account debit to return outward. Then comes sold goods for cash, 30,000, cash account debit to sale, paid being the goods sold for cash, being electricity to cash, being electricity expense paid, telephone expense debit to cash, being telephone expense paid, rent account debit to cash, being rent paid, wages account debit to cash, being wages paid. This is all about the first step. But in the exam, you have to do the journal entry in your mind and make a direct posting to the ledger. In the exam, if you do the journal, prepare ledger, prepare trial balance, it will take time. If they ask you to prepare journal, ledger, trial balance, then please do that. If they ask you to prepare ledger only and trial balance or only ledger, then do the journal entry with your practice in your brain and post it to the ledger. So first of all, before preparing the ledger, we will go how many ledger account is to be opened. So this is your first ledger. This is 1. I am writing 2 is the capital. So cash 1, 2, 3. Purchase is here. Cash we have taken. Sale 4. New accounts 5. Shravan. Then sale is over. Purchase we have taken. Anurag 6. And return outward 7. Cash we have done. Sales we have done. Right? Electricity is your account number 8, telephone account number 9, rent account number 10, wages account number 11. So friends, we have to open the 11 accounts, and in the journal entry you will see one account is debit, the other account is credit. So one account जो होता है दूसरा account credit होता है. Right? So therefore we will go for the 11 accounts. We will make a posting over there. I will show you how to make a posting. Let us prepare the ledger. And you know the ledger format. You please open 11 account in your notebook and we will start the posting of the ledger. So this is a ledger and this is cash account. I have given you, this is date, particular, journal folio amount, debit, credit. This is the format. We have discussed the format in earlier 2 classes also. And I have not written all these formats here, but in your khata you will, or notebook you will all definitely write with the proper format and make a posting. So friends, let us start with the posting of the ledger. As I have told you, the first one is your January 1. This is your business started with cash account debit to capital. So in the posting, cash debit, go to the cash account, write in the debit side. Go to the cash account, write in the debit side. कैश अकाउंट में कैश को मत लिखिए, you have to write the other one, so that is capital. So write to capital account 1 lakh. This is the position. And in the capital Your capital account is credit. So in the capital I am writing 1 lakh. Date will be same, 1/1/19. And capital में capital नहीं, in capital we will not write by capital, we will write the other account. In cash account we are writing the other account. In cash we will not write the cash, we will write the other account, that is capital. In capital we will write the other account, cash. So by cash, this will be by cash account. You can remember in this way. Or another one technique, go to the debit side, write the credit to capital. Go to the credit side, write the debit by cash. In this way also you can understand. In the cash account we will not write the cash, we will write the other account, that is your capital. In capital, capital is credit, go to the credit side, write, don't write capital, write the cash, the other account, then it is over. Similarly, on second, bought goods, purchase account, debit to cash. So go to the purchase account. This is on 2/1/19. Purchase account debit. Purchase debit side. This is debit side. Write the other account, that is cash. 20,000. So purchase is 20,000. And in the cash account, cash credit, go to the credit side, write the other account, that is your buy purchase. By purchase account 20,000. Write the other account. In purchase, write the other account, cash. In cash, write the other account, that is purchase. In this way you can remember. Then 3. Sold goods for cash, 7,000. This is your cash account debit, 7/1. Cash account debit to sales. This is your 7,000. Cash account debited to sales. So in cash account write the other account, that is your sale. In the sales account you write the other account, that is your buy cash. The other account is cash. In sales the other account is cash. And every debit has a credit. So 7,000. You write here 7,000. Right? Then we will go to sold goods to Shravan. 6,000. 15. Shravan account debit. Shravan account debit to sales account 15,000. Shravan account debit to sales account. This is 6,000, not 15. This is 6,000. In the Shravan account you write the other account. Shravan is debit. Go to the debit side of Shravan account, write the other account, that is your 6,000. In sales account you write the 6,000 here. The other account is your buy Shravan. By Shravan account 6,000. Similarly, we can go to bought goods from Anurag. That is Anurag purchase account debit. This is your date will be 18th. 18/1/19. Purchase debit to Anurag. This is your 50,000. Purchase account debit to Anurag 50,000. This is 50,000. Then purchase in purchase account write the other one, that is your Anurag. In Anurag you take the other account, that is your by purchase. By purchase account, this is your 50,000. So go to purchase account, write Anurag. In Anurag write purchase, the other account. In friends, in Anurag I cannot write Anurag. In purchase I cannot write purchase. Write the other account. Problem will be solved. Return goods to Anurag. This is your return outward. Anurag account debit. This is on your 19/1/19. This is Anurag account debit to return outward. Return outward 5,000. And in return outward credit, go to the credit side. Go to the credit side. Write Anurag, the other account. This is your 19/1/19. By Anurag. By Anurag account 5,000. Go write the other account. This is on 19. Go to 20. Sold goods for cash 30,000. So cash account debit. This is on 20th. Sold goods for cash to sales account. Your 30,000. Right. Go to the sales account. And in the sales account, write by cash. By cash account 30,000. Right? So debit, here credit. In cash you write sale. In sale you write cash. The other account you have to write sales credit, cash debit. You go to the debit side, write the other account. You go to the credit side, write the other account. So 22, paid electricity 1,000. So electricity 22, electricity to cash. This is 1,000, paid electricity 1,000. Now this is cash credit. Go to the cash account credit side. This is 22/1. Write by electricity. By electricity account 1,000. Right? Then paid telephone bill 500. Go to telephone 28. To cash. To cash account 500. Go to telephone debit side, write 500. In cash, write 500. This, and you write the other account, that is your, in cash you write the telephone. 28,1 by telephone. By telephone expense account 500. Then paid rent 800. Rent account debit. This is on 30th 29/1. Rent account debit to cash account. How much it is? 800. So this is 800. Go to the cash account. Write 800 here. Buy your rent. Write the other account. This is on 29/1. 800. Then we will go to wages account. Wages account debit. 30th to cash account 3,000. Wages account debit to cash 3,000. And in the cash you write 3,000 credit. Also write the other account, that is your wages. 31. So friends, if we see cash account, in cash account we cannot write cash. Write the other account. This is the principle. In telephone account I cannot write telephone. Write the other account. Similarly, you make a posting, it will be very easier. Right? Then the next part, our posting is over. The next part is your balancing of ledger. As I have told you, the balancing of ledger is just like take the side total which is higher. Right? The balance will come in the other side. You can take the example of a taraju. Suppose this is 1,000 and here only 200 is here. So it is unbalanced. Taraju unbalanced. Right? If you want to make a balance, you have to put 800 so that it will be 1,000. So make a total of the larger side. Then put the balance in the other side. The larger side may be debit, may be credit. If debit is larger, put balance, other side credit. If credit is larger, put balance in the debit side. And this balance will continue to the next period. Therefore, it is taken, carried down. So let us start. Here cash account, the debit side is higher. 1,07,000, 30,000, 1,37,000. The cash account is higher. Here this is 1,37,000 minus, you make a minus 20,000 minus 1,000. Just deduct all these things. 1,11,000. So by balance CD carried down, it will continue to the next period. Therefore, it is called carried down, continue to the next period. 1,11,700. So this will be total 1,37,000, right? And give a date, the closing date 31/1, and this is a debit balance because debit side is higher, and we have put the balance credit. So in the next period, this is 1/2/19, it will be 2 balance brought down. This is carried down to the next period. It is brought down from the last period. This is your 1,11700, right? This is how we can make the balancing of the ledger. This is the balancing figure. This is the balancing figure. Then let us go to your capital. Capital only credit is there. You write the last date, to balance, CD, continue to the next period, 1 lakh, make a total, and 1/2/19 by balance brought down 1 lakh. By balance brought down 1 lakh, right? So by balance brought down is 1 lakh. Purchase account 70,000. So here it is 70,000, the credit will also be 70,000, but in credit side nothing is there. You just take, this is by balance carried down, continue to the next period, 70,000. This is your 2/1/19 to balance brought down to the next period, 70,000. So this is carried down to the next period, 70, and this is brought down from the last period, 70,000, right? So these three accounts are balanced. This is your balancing figure, this is your balancing figure, this is balancing, this is your balancing, right? Then we will go to sales account. The credit side is higher, so this is 43,000. 43,000. We will write here 31/1 to balance CD. You write 31/1/19. This is 43,000, so it will be tallied. Then CD is in this side, BD will be in this side, so this will be 1/2/19 by balance BD 43,000. So sales is your 43,000. This is your sales. This is balancing figure. Now Shravan is only debit here. There is no credit. So I am writing 6,000 here. here also 6,000, and this will be your last date by balance CD 6,000, 1 to balance BD, this is also 6,000, right? So friends, this is your balancing figure, it comes over here. Then Anurag account, credit is 50, debit is 5, credit side is higher, so 50,000. Here balancing is 45, so to balance CD 45,000, total 50,000, and we can write by balance BD 45,000, and date will be 1 2. This will be 1 2 will be the date. So in the Anurag account, the balancing is 45, here also 45. Then return outward account, it is only credit, so 31 to balance CD 5,000, one two by balance BD 5,000. See, CD means continue to the next period, BD means brought down from the last period. So CD, here it is BD. This is balancing. Now telephone, this is only 500. Let us write here 500 also, and by balance CD 500, this is your 31 and this will be 1 2 to balance BD 500. Rent, so this is your rent account, 31 by here debit is higher, this is 800, balance will be balance CD 800. Here also 1 2 to balance BD, this is also 800. So here the balancing figure is 500, 800. Wages also, this is your wages. Wages also, here debit is higher, put it here also, by balance CD 3000, put the date here, 1 2 to balance BD, this is 3000, right? Electricity also same, by balance CD 1000, 1 2 to balance BD 1000, right? So in this way we can, this is 1, this is here, this is here, this is here, right? So the posting to the ledger, the balancing of the ledger is over. We will go for the trial balance. Trial balance, this is debit, this is credit, this is your ledger folio. Let us write the cash. Cash debit, only the BD you have to take. This is your 1,11700 cash. Capital credit, BD is credit side, so capital 1 lakh, you can write 1 lakh here. Purchase is debit, so purchase is debit, 70,000, it is purchase. Then we will come to sales credit. Sales, this is 43,000, you have to take only the BD brought down. Shravan, it is debit, Shravan account, this is debit by 6,000. Anurag, it is credit. Anurag account credit 45,000. Return outward 5,000. Return outward 5,000. This is your return outward. Then we will come to telephone 500. This is telephone 500. Telephone, after that your rent. So rent, I can write 800. Wages, I can write 3,000. This is your wages. Electricity, I am writing here electricity. Electricity, it is 1,000. All debit, BD figure you have to take it. So number of account 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So let us make a total of the debit and total of the credit. If we make a total of the debit 1,43,000, I am writing the total here so that you can see 1,93,000. But friends, you write in the bottom 1,93,000. This is your total. Now debit side. 1,93,000 both the side. This is also the debit side is 1,93,000, right? So your trial balance is tallied. So this is how you can prepare the journal, you can prepare the ledger, you can prepare the trial balance. This is the technique. Friends, if you like the video, please subscribe and offer your comments so that I can understand whether you are understanding or you are not unable to understand. If any doubt is coming and if you are putting in the comments, I will definitely take care of the doubt in the next class. So if you like the video, please subscribe and offer your comments. That will help me as a input to the service. So let us meet in the next class. Thank you all.